Well, today's sell-off was broad, with bank stocks particularly hard hit. Bob Pisani watched it all from the floor of the New York Stock Exchange.
The markets have been rising because earnings guidance, the main driver of stock prices, have been strong. The global economy is improving, though there's been some weakness in China recently, and geopolitical risk in Europe is now lower. Investors believe in the Trump agenda of lower taxes, less regulation, infrastructure spending, and they believe that the markets can withstand a certain amount of political drama from Donald Trump as long as this agenda keeps advancing, even if it's slowly. But what's happening now is different. Most of Trump's tweets in the past, well, maybe odd, were not actionable. This is actionable. Talk about obstruction of justice or an impeachment fight. That's another story altogether. It's a new level of uncertainty. So here we are faced with the prospects of a president that might be derailed by months of fighting. The risk is even if he survives, he loses so much political capital that the only thing he can get through is something that everybody can agree on, maybe infrastructure. But corporate tax reform might be in trouble. And this is why the markets are reacting today. So the potential for a 5 to 10% pullback has increased. Now, it's about time we had that. We haven't seen a modest pullback in a long time. The bottom line, traders finally have a downside story with a little meat to it. Where do we go from here? Anything that closes off a path to obstruction of justice or impeachment talk would be overall a market positive. But if this picks up steam and the prospects of a Watergate-style hearing, for example, emerge, well, it could be a very long summer. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.